Yearly figures. What are we going to talk about? 4 giant stocks. 2 of them bad results. 2 of them, well, not bad results, maybe surprising interpretation of the market. Or I think we want to show people a little bit, what to look for at this stage.
We start negative.
We start negative.
We start with 2 companies that really surprised us in a bad way.
Yeah. And the first one we talked about, I think about 6-7 months ago, was Intel. And Intel was on track to actually have a really nice performance in 2023, one of the better performing large cap mega stocks, to say so, because the share price went up from let's say around $30 to $45, $50. But unfortunately, the figures yesterday were not interpreted well, and the stock price after hours went down with almost 10% to $44.50, and the closing was approximately $49.69. So yeah, people having Intel in their portfolios, when the market opens in a couple of hours, they will feel that, unfortunately. Why was that? Mainly because of the fact that during the press release, the CEO was not capable of giving a clear guidance for an outlook. What is going to be 2024 for them? For the rest, it was not that bad. Earnings per share 54 cents compared to 45 cents same period last year. So actually pretty decent, actually a lot more. Revenue was the guidance from Wall Street that they would come out around 14 billion, but they said themselves, Intel in this case, they will not go above 13 billion. So the market did not like that. So all in all, if you look at the company itself, they had a really strong PC market, a lot of demand for new computers. And the computer segment, in that case, the revenue of that part rose with 33% as a proof of what I just said. So all in all, not as positive for Intel.
I bought a new computer this week.
You bought one, yes.
With the new Intel processor.
How was it?
It's amazing.
Morning? Yeah, was it quick?
Yeah, it's amazing. It's an amazing product. Okay, but the investors that are holding it for more than a couple of months, they had a fantastic months, no?
Yeah, definitely. If you bought it in let's say around October last year, you bought it around 35, and so you're still up about 20%.
Another company. We already spoke a little bit about it a couple of weeks ago, but the main topic was Byte, Build Your Dreams, a Chinese car maker with a 40% market share in China.
Correct.
We compared it with Tesla, and we already warned a little bit about the development of Tesla. Tesla came out with the figures, and the share price dropped more than 12%.
Yeah.
Why? I think it was not really surprised. So that it's now trading at around $180. And in the summer, in July, it was trading at $290. So it's already back to. So it's a little bit opposite chart of Intel because that rose. So it's always, if you are all in a downtrend and then again 12%, that's not nice for investors. No. Now, why? I think the figures were not too bad. The operational income from operation were down with 47%. That is bad. But the strategy from, we said it before, and probably you know it, especially if you are holding Tesla shares, the strategy of Musk is that to lower the prices, give up margin. They still have really good margins on every car they sold, but to lower prices to get or maintain the market share. It's the giving up margin is one thing, but also you want to gain more clients, you want to have more people to drive a Tesla, but if you lower the prices, a person who bought a Tesla last year and the neighbor is buying the same car this year, he pays maybe 20% lower. So I don't know if that creates a good commitment for your customers.
No, true.
Morgan Stanley, they still have this is something I want to highlight because it's a little bit strange. They still a target price of around $340. Again, it's not trading at $182. Still, if you look at the earnings per share, the price earning is still high with Tesla. And I think that Morgan Stanley, all the private bankers, their clients of private banking are holding Tesla shares. That's why they keep so
positive about the price.
Yeah, the high target price. Musk still owns 13% of the company, and the outlook that is important. I think that's also what we will speak about a little bit more with the other companies. The outlook was not that positive. So
No.
Tesla said they are warning for the slower growth, still growth, but a slower growth in 2024. And another thing is that Hertz, one of the biggest car renters in the world, they bought 2.5 years ago, 100,000 Teslas, and they're now selling them already because they see that, especially in the renting business, the system of an electric car is not working properly. And I think there are also, you have now in Amsterdam in 1 week you have 2 times a power cut for like 30% of the people were without electricity. They still don't know exactly where it's coming from, but there is a big chance that it's coming from also the electric cars because they're consuming so much of the network. So Tesla, unfortunately for the people that hold it, and it went down 12% on the figures and then mainly on the outlook of 2024. But now positive.
Now positivity. Come on. I'm gonna finish off with ASML. Our Dutch proud. I think we did really well with their figures over the last year. CEO Peter Wenning said they're at the bottoming out the cycle, so they're preparing for a new cycle. Basically, that means that there's a lot of transition going on. Stock price went through the roof. It was at 650 euros by beginning of last week, and it's at 812 at the moment.
Week?
Yeah, so it went from 650 to 812. And it's funny because the Amsterdam Stock Exchange index is also at that price. So, and I looked at the options. I forgot to mention it in our Dutch vlog, but if you look at the call options, the 820 call on ASML has a price of 18 euros, and an 820 call on the index has a price of 7 euros. Funny, isn't it? So the index is actually,
because it's also more volatile.
There's more, ASML is of course more volatile, so there's more risk there. But looking at the risk of the semiconductor industry and the things that were mentioned during the press release, one of the points was, of course, that the semiconductor industry has become subject to the geopolitical underground, to say so. There's a lot of very advanced weaponry being built at the moment, unfortunately, for the wars that are going on. And chips are being used for that, and maybe also ASML chips. I don't know for 100% sure, of course. But looking at the figures, net income for the fourth quarter rose to 2.05 billion, so 2 billion, €5.20 per share. So that is really nice. From 1.8 billion a year earlier with €4.60 per share, so almost 10% increase of share. The net sales for the fourth quarter grew to 7.24 billion euros from about 6.5 billion a year earlier. The dividend for the people that is important is established at €6.10 for the year 2023.
Around 1%.
Yeah, it's not a big dividend stock. There's not a big dividend stock, and you see that people many times don't hold so much units of the ASML stock because it's pretty expensive to one. Especially if you want to work with options, 100 stocks is at this moment €80,000. So imagine. Important things. ASML said that the pipeline is really picking up, or really filled, and specifically in the last quarter. Net bookings in the pipeline tripling to 9.2 billion euros, where in the third quarter they only had a pipeline of 2.6 billion. So from 2.6 to 9.2 in one quarter. So I think the sales guys of ASML have a nice bonus because they did really well in the last quarter.
I think there are not that many sales guys because they sell the
I'm
stuff
just saying,
automatically.
I know, but I'm just saying.
Everything machine they make, they sell because there's so much demand.
So much demand.
They hardly don't have a competitor. The last one, and we talked about it in the past multiple times, it's Netflix. And after the figures, it jumped with 7%. And we spoke also when it was 2 and 3 years ago, when it was really trading low. There was a lot of criticism about Netflix because they said they can't compete with Walt Disney because they have still a lot of movies on the shelf that they can push. And there are other big companies, they have much broader, they have already declined. Netflix does not have declined, they have to attract new clients. And we were more positive about it because they still had their model with increasing prices. They did in the past, and they show that they don't lose hardly any clients. So I think if you look back for what the price on an average subscription of Netflix, it's probably 30 or 40, 50% higher than 3 years ago. And also they had back then 100 million people that watch without paying, and they said we're going to change that, and they also did, and that's altogether it went very well. Also, of course, what do they make? Netflix is a really strong, powerful place now.
Absolutely,
I think.
yeah, definitely.
A lot of people watch Netflix, and how many people are watching Netflix
Paying
over the whole year? Paying 260 million.
Yeah, it's tremendous. Think about it.
The earnings per share was less than expected. The market thought $2.20, but it was only $2.11. So all the figures were not too good, but the outlook was really good because they attracted, and that was more than expected, 13 million people, new subscribers in Q4. So probably, of course, you have also a churn, but the next quarter you have more people that pay.
Absolutely.
And so you have more revenues, and that's almost direct profits. So and that was more than what the market thought. They also closed a deal, a 10-year deal with WWE about presenting, and you liked it, Mr. from your wrestling shows.
Yes, I love it.
And they're also more working on games, but mainly on live television. And I think that's also something that they still don't have, live television. And that can be a really big jump. Amazon Prime is a competitor of them. They announced that they will introduce an advertisement model, and Netflix said, no, we don't want it because our clients are not used to advertise. For Amazon, of course, it's much more interesting because they have already the products with Amazon.
Yeah.
So that's for them
buy
more
directly.
logical. Yeah.
You can just watch a series, buy now.
Yeah. Or you see something in the series and say you have all buttons that you can
yeah.
buy the product. I like that skirt. I like the trousers, and I buy
Exactly.
it. Netflix, they say our customers are not used to it, so we won't introduce it now for the moment. But it's also, I think, a strong signal because they don't need it, because their model is so, they recovered so good, so they don't need the advertised model. The revenues they grew, and they what I said, it's a lot about nowadays about outlooks, because what we said a couple of weeks ago, but it's also the consensus of the market that 2003 was for a lot of investors a good year, not for everybody, of course. It's like every year. The Chinese stock market went down with 30%, but Nasdaq went up. And we think, and it's also that shows with the 4 stocks that we are discussing here, you have to do your homework probably in 2024. It's not automatically markets will go up or they all will go down. And you see here 4 different companies, really huge US large caps. And then you see how they present the outlook mainly, and how the market respond on it. +10, -7. There are big differences. That's why we want to discuss it and to give you a little bit food for thought. Okay, look at my shares. When are the quarterly figures coming up for my shares? Yeah. You take that in consideration.
Absolutely.
And in total, and then I want to close off 2023. The profit per share for Netflix, again, it is now trading at 562, was $12. Next quarter, so the first quarter of this quarter mainly, is expected to be $4.50. So that goes then, if that will go on. But with new subscribers, you have a big chance that it will go on, if they don't produce too much, that you go from a $12 profit per share to $20 profit per share. There's a big increase. But again, it's how much there is. A certain amount already in the price. How much is in the price? Technical perspective, looking at the RSI, it's at the top, so that means it's going to an overbought model. Scenario, yeah. But I think, we have something with Netflix. We like the company and they perform very well.
Thank you for watching. See you next week.
Give us your thumb.